American and European style options. These are the two main types of contracts that are available to traders. American style option contracts, well, these can be exercised at any time up until expiration. European style contracts, well, they can only be exercised at expiration. And understanding the difference between these two types of contracts, it's essential when you're trading options. In this video, I'm just going to dive into the key differences between the American and the European options. And starting with American options, this is the most popular type of options. It's the American style. It expires on the third Friday of each month. And there are also quarterlies and weekly expirations. Also, individual stocks are traded using the American style options. And like I mentioned, these can be exercised before the date of expiration. Options contracts that are in the money at the time of expiration will be automatically exercised by the broker unless instructions are given not to do that. And what happens if a contract is exercised? Well, the buyer of a call will buy the shares of the underlying asset at the strike price. The seller of the call will sell the shares to the contract holder at the strike price. If you bought a put, you will sell the shares at the strike price. And if you were the seller of that put, you'll be buying the shares at the strike price. So as an example, let's say today is the expiration date for an options contract of stock ABC, and you bought a call. And the strike price that you went with was $140. So if ABC closes in the money, that's the underlying price of $140 and 1 cent, and anything above that, the call buyer will pay $14,000 for 100 shares of ABC stock. The seller of the call, they'll receive $14,000 in return for the 100 shares of that stock that was transferred to the call buyer. Now imagine you're the buyer of a put option, and we're going to use the same strike price of $140. On the day of expiration, the current market price is $139.99 or lower, while the owner of that put option receives $14,000 for 100 shares of ABC stock. The seller of that put option pays $14,000 and receives 100 shares of that stock. With American style options, you can be fairly confident that barring any sudden turn of the market, if you are in the money near market close on expiration day, that's probably going to be the settlement price or pretty close to. European options, these are options on the major indexes such as the SPX, the NDX. One major difference is these options can only be exercised at expiration, as opposed to American, which can be done anytime prior to expiration. Now, the expiration of these contracts is the close of the Thursday trading session. That's the day before the third Friday of the month. So that's 1 day earlier than American. And while the settlement price of American options is known at the close, European options, you don't know it until the next morning. So there is a major risk that a major event could happen during that evening between those 2 days. This can result in a shocking settlement price the next day. For a slightly out of the money option, it could put you into profit, while the reverse is true for an in the money holder. Now, unlike American style options, no shares change hands during the settlement period. So if you own an option that has intrinsic value, that value is deposited into your account. The seller of that option will have those funds removed from their trading account. So let's assume the settlement price of SPX with a strike price of $3,800 is $3,805. So if you are the owner of a call option, you would receive $3,805, take away $38,000 strike price, times 100 is $500. That seller of that call option would then pay you $500. Now, if these were puts, the owner would receive nothing, and they'd be out the premium that they paid for this contract. The seller of the put pays nothing, but would keep the premium that they received. Now, for most of us, we're not going to have to worry about the difference. American options can be exercised anytime before expiration. European style options can only be exercised at expiration. Now, the flexibility that this offers can impact your bottom line, especially if there's a huge jump in the underlying. So with American style, you could exercise the option. But with the European, well, you can only hope that that jump in price is holding until the expiration date. The settlement price for European style options is known the Friday morning after expiration, while the settlement price for American style options is known at the close of trading on the day of expiration. Again, with the European style options, there is a risk of a major overnight event happening and affecting your bottom line. No shares change hands during the settlement period for European style options. It's all done on a cash basis. So if you own an option that has value at expiration, that value is deposited into your account. The seller of that option will have those funds taken from their account. Trading options, and when I say trading options, I really mean American options. It's a great way for you to make money. You can make profits in both up markets, down markets, even sideways markets. We have an 8-minute success formula guide. You can learn how to trade options pretty quickly and easily. It's an 8-minute option cookbook. You can download that. It's actually one of our more popular options giveaways. Hope you like that. Make sure you hit like and subscribe. We'll talk to you soon.